The broadcast is now starting. All attendees are in listen-only mode.
Good evening, ladies and gentlemen, and thank you for being with me. Of course, we seem to have some heavy competition again. The last webinar I did coincided with the Trump-Biden debate, which was absolutely necessary viewing. And today, of course, we're competing with Mr. Biden's press conference that's been delayed for a couple of hours. So, Grant, can you hear me all right, folks? Would somebody please type in the question box that you can hear me all right? We'll see who there is. Got it. Mark L., my champion, the world record holder for day trade, for paper trading, I should say. Of course, Mark's with us. Wonderful to have you, my friend. Okay, so what a day indeed. NASDAQ and the S&P both succumbed to their second Danielcode TO3 and blue line signals and rolled over. The small cap index, the Russell 2000, had its biggest up bar that I can remember. And I guess what we take from that is that the market is now revaluing all of those Russell 2000 stocks in different multiples. Don't forget, of course, folks, what we're doing when we're trading futures. They're a derivative. We're actually trading the underlying is the combined stock prices in the various indices. So when we're trading the S&P futures, that's based on the combined price of the S&P 500 index of stocks. The same with Russell, the 2000 small caps, the same with the NASDAQ, the 100 biggest tech stocks. So it looks to me as if something quite extraordinary has happened, that we've got the two biggies, S&P and NASDAQ, rolling over as their Danielcode trade signals have been calling for. And hello, and good to have you with us, Tony Di Domenico from Chicago. Lovely day up there, eh? Glad to hear it, mate. Tony's been with us for many, many years. He's a lovely chap. I had the opportunity of meeting him when I was in the States some years ago. Anyway, lots happening with the indices, folks, and a whole lot more as well. So let's get started. Here we are. So you know that markets are rational, orderly, and sometimes predictable. Well, we've had sell signals on the NASDAQ and the S&P for a few days now, and they've gone exactly to target and eventually rolled over, at least for today. Now, bear in mind, Thursday is the most negative day on the market seasonally for S&P in particular. And Friday is the most buoyant, bullish day. So we'll see what happens. But massive divergence between S&P and NASDAQ on one hand, both rolling over to their Danielcode sell signals, and the Russell 2000, the small caps index, going absolutely ballistic upside. What a thing. Well, remember, there are two ways basically that stocks can increase their value. One is with good trading performance, good annual results, good trading results. The other is the multiple that the market wants to ascribe to them. And typically that's 16, 17's pretty high multiple. 19's usually considered a high multiple. I'm talking about times earnings. And NVIDIA, at its recent high, was trading at 42 times earnings. So has there been a whole-scale re-rating of small caps? Wouldn't surprise me. There's so much money flushing is the word about the system at the moment. It's got to go somewhere. And that's interesting, more than interesting. It's exciting what's happened today. All you guys trading Danielcode time signals, you filled your boots up both ways, shorts in the S&P and NASDAQ, and long the Russell. Let's have a look here. Now, what we're talking about today, just bear in mind that the Danielcode time signals, creating and trading Danielcode time signals. They're the best trading system I know or have ever heard of, and that's what I teach at the full Danielcode tutorial, the one-on-one with me method of teaching, which is superior to anything else. But bear that in mind because we're talking about that as well as other things as we move through today's session. So, first of all, delays to our new video tutorials. 2 weeks ago, I told you they'd be available on Monday, and they haven't been. And what's the answer? Well, quite simply, my apologies. I've been ill for a long time now for something with what they call walking pneumonia, and it's a unusual winter flu virus that's everywhere in Australia and New Zealand. My wife took off for New Zealand to do a bit of skiing a couple of weeks ago, and she's badly hit with it, and it's everywhere, and it's called walking pneumonia. Because you get as sick as a dog, mainly with coughing and head cold symptoms, but cough, 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 cough non-stop. But you can walk around all right and you can function all right in other ways. But for what we try to do with our video tutorials that we're preparing for you require me to dictate them, and I've done 6 of them, and 3 of them have had to be scrapped. Just too many breaks. And if I take a break from talking to you for a few seconds, you'll understand that I'm having a coughing fit. So it's a problem, and I'm recovering a bit now. It's pretty bad this morning, but I'm on the right path, and I'm most hopeful that I'll get those remaining video lessons dictated and ready for posting over the weekend. So those of you who are waiting on our new video tutorials, what I call Teach Yourself to Trade, those videos, expect them to be available early next week. After I've done them, of course, Terry's got to load them into the website with all the other little tricky things about paying for them and what have you that go with it. So there may be a few more days, but they're not far away now, and that's quite simply the reason I've been unable to speak continuously for any period of time. They're going to be very exciting to a lot of people. They give a much larger group of people the opportunity to learn about Danielcode time and price trading, and at a much lower price point. And I hope that it's going to be very, very useful to those of you. I know you've been looking for something like that. Bear in mind the normal full Danielcode tutorial, which is one-on-one with me, and we now call that Masterclass. It's still available and continues as our premier product with new swing trading indicators. And I'm not pretending that the video teaching series will match the full Danielcode tutorial. It can't, nothing can. When you're doing the Masterclass tutorial with me, all of your questions are answered on the spot as we go through various different sectors of the learning process. Whereas if you're doing simply the video tutorial, all the material is there, but you've got to put it together yourself. And I hope that the way I've dictated it will make it easy enough for you to go ahead and do that. I'm talking about Masterclass, which is our main one-on-one trading tutorial. There's a new trend swing trade confirmation, and I call it a 3-in-1 swing trade. It's rather difficult to visualize, but I'll show you a bit of it as we go along. And it's quite an extraordinary indicator. And what's happened is that I've been completely in awe of our 6-day charts. Those of you who are getting the 6-day charts, I mean, they've been, sounds silly to say it, they've been even more accurate than our daily charts, which, as you know, are phenomenal. And thinking about that, I start to have a look at a 3-day chart, which I haven't looked at for many years. And all of a sudden, these swing trade trend signals popped out at me. And I've spent most of the time I've been unable to talk and dictate, running through various markets, in fact, all of our futures markets. And two things have come out with this new 3-in-1. I call it the 3-in-1 trade because it's derived from a 3-day chart. But on a 3-day chart, the actual trend change portion of it's muted. And you've got to see it on the daily chart to identify it. But you still got to try and look at 3 days as one bar if you can try to visualize what I'm talking about. And it gives you two things. It gives you end of trend and new trend change studies, which are phenomenal, as you'll see. And the measured retracements of trending markets are incredibly accurate. And you'll see all of that as we go ahead. One of the most important things I've discovered about this new 3-in-1 swing trade signal is that if a market doesn't have it, it's going to consolidate. Now, we have methods that I teach you to avoid consolidations, but by the time they become apparent, you've usually had 2 or 3 losing trades. And with this new indicator, it's going to be telling you which markets you should stand aside from. And we've had that recently in the Russell, which has been in a great big consolidation for quite a period. But always bear in mind the breakout. Be well aware and be looking for that breakout, which is quite subtle, as you'll see as we go on and talk about the Russell 2000s trading today. And these new swing trend indicators will make you immune, although you should be already if you're trading Danielcode time signals, but it makes you immune to big market turns because all of them become opportunities for wonderful swing trading. So I was reminded during the week by one of our clients who's a GAN champion, and as I used to be, I mean, for many years I was the world chairman of the GAN Appreciation Society, and he was talking to me about GAN's book, The Tunnel Through the Air. And I know many of you have read it. A lot of you are guys who have done GAN or had an interest in GAN, and The Tunnel Through the Air was a book that GAN wrote. And it's sort of a schizophrenic book because it has two completely different and opposed effects on people. Some people say, oh, it's marvelous. I know people who say, I've read it 2 or 3 times. It's wonderful. I get something out of it every time. And then you got the people like me who say, oh, you're joking, aren't you? What a waste of time. And I just didn't get it at all, which I guess is, says more about me, of course, than GAN, who was phenomenal. But what he was doing, GAN didn't know about Danielcode, but what he did know about was Trinity, and also he knew particularly the way the Trinity 3, what we call the trine, T-R-I-N-E, the way the trine is used particularly prominent in Masonic rituals. And GAN was a lifelong Mason, and not only that, he was made a 22nd degree Mason, which is an honorary award for somebody who's done a great deal to help the cause, the Masonic cause generally. So he was a man in very high standing. And the Trinity links, or the trine links, are why GAN has a 1 in 3 and a 3-in-1 speed line on his charts. So that's what you just saw was the same market with the highest high of the last 3 bars, the lowest low of the last 3 bars linked together. And as you can see here, the tunnel appears. This is what GAN was talking about, the tunnel through the air. It's virtually what happens when you have a 3-bar high, 3-bar low connecting your daily trading bars. And if you stop looking at the bars and look at the outline as you are here, this is the tunnel that GAN was talking about. And that got me thinking a bit more about GAN. He's never out of my mind because I spent a considerable part of my life doing GAN. And his comment that went with that the safest place to enter, he says, is the first reaction. And what he means by reaction is a counter trend. And this tells us that Gann is basically a swing trader. He's not confident in picking tops and bottoms because he didn't need to. Gann was trading stocks. But for us, as futures and forex traders, we have to be very good at picking tops and bottoms because derivatives are a very sharp sword, but it bites both ways. If you're long and you can't pick a top, you've got troubles. If you're long and you're following Danielcode, the signals and the Danielcode members charts will show you those turns coming up days and sometimes weeks before they happen. So over the last week or two, while I've been thinking about Gann, I've had a couple of interesting conversations with some of our clients. One was with Greg, Greg from Colorado Springs. He's now in Texas. He's moved his family to Texas, but his business has been in Colorado Springs for many years. I met Greg, a great friend of mine. I met him when I was teaching in Colorado Springs many years ago. Lovely, lovely guy. He's a wealth manager, a very good trader, heavily into the insurance side of the wealth management business. And he's now reached a stage that business demands are easing off a little bit, and he's transitioning to much more intense trading. So this is a guy who's got everything really stitched together. I mentioned to him while we were having a chat that Texas was having a heat wave, and he said, fine. He said he drove up to his Colorado Springs home. But he was doing his redoing his tutorial again, and he mentioned to me that he was disappointed in his paper trading. And specifically, he said he was trading the 2016 natural gas, paper trading the 2016 natural gas contract, which of course is one of the tasks I set for all of our Danielcode tutorial students. And he had about 15,000 profit, and he'd said he'd finished trading the first 9 months of the year, and he was disappointed in that because it wasn't much money. And Greg's a guy who's used to big numbers, but what he hadn't realized is that the margin for natural gas in 2016 was $3,200, and if you extrapolated his 9 months trading over a year, that's about 650% profit on margin, with the best 3 months of the chart still to come. So the capacity for misunderstanding is always present, isn't it? Which is why it's so helpful to talk to you guys when you're doing your tutorial. That sort of misunderstanding has 1,000 uncles and cousins. And when you're doing the live one-on-one, the masterclass tutorial, we can fix those sort of issues immediately on the spot. The other conversation I had during the week that I thought would interest you was a teaching session with Joris, who's a European gentleman. He's based in Zurich at the moment. And I mentioned him a couple of weeks ago. He's doing his Danielcode tutorial course, and he's a forex trader, and he's been working with prop firms to finance his trading. Now, this is the dream of many. I know there's a lot of you are interested in working with prop firms who offer funding opportunities for your trading. And essentially, most of these businesses are offering day trading opportunities, just the way they operate. And Joris had his own very good trading system. He was a good trader before he came to me, but he's made it much better by using the Danielcode targets from members' charts and the trade signals. And he was telling me that just in the last 2 weeks, he's now graduated to a $200,000 account. So those of you who are interested in working with prop firms will know the steps you have to go to get to a $200,000 account. So he's a very, very good trader. And most people would be happy with that. But it's a very difficult thing to do because for him, he's got to be very, very highly focused to the intensity required to make this trading, and he says it's quite exhausting. So recently he's had 9 out of 10 winning trades, and that's what got him to his $200,000 account now. But day trading limits your earnings. In his case, it's very hard to do. It's very intense. It's not something you can do all the time. But any of you who have dealings with prop firms, it's optimized for win percent, not profit. And that's completely the opposite of what we do at Danielcode. When I started to develop the Danielcode trading system, the first question I had to ask, and the first question any of you should be asking yourselves is, what is your aim? What is your target? So that you make sure you're using a system that's optimized for that. And the Danielcode trading program that I teach you, particularly the Danielcode time trading, is optimized purely for profit. It seemed to me pretty sensible. If I was going to have to build my own trading system, I wanted it to be the most profitable trading system in the world, and the safest. And it is. That's in fact what's come out of learning to create and trade your own time trading signals. So there's just a couple of different approaches. Next week, Joris and I are going to have a deep immersion in time trading, creating and trading time signals, and he's going to add that as another skill to his bow, which already is pretty well tensioned. So when you're looking at optimizing for profit finding, what you're going to have to do is you're going to have to be able to find the tops and the bottom with some degree of confidence. And as I said, it was obvious to me, always been obvious, Gann was not particularly confident about finding a top or a bottom. And the reality is, nor am I, because you can have something that looks like a perfect top. It finds its Danielcode target numbers, it has its time turn signals, it elects those, it makes a turn, you say, wow, that might be the top. It might be, but it might simply be a top. There may be more tops to come. And if you're trading Danielcode time signals, that doesn't matter at all. But look at this new tool I've got. I've just slapped it on here to show you some of the places. This is Beans, which is a marvelous market, and it's been trending very, very well for some considerable time now, since before November, actually, last year. And I'm just showing you here those 3-in-1 trend confirmation signals that it creates now. If you're trading Danielcode time signals, you'll be in those trades well before you see those signals. So they're long-term swing confirmation trend signals. But you'll be in, if you're doing your Danielcode time trading and even your Danielcode price trading, you'll be in the market days, sometimes many days, before you see those signals. But what they are is they're trend confirmation signals. They're saying this trend is continuing. And the market's very quick to give the opposite trend when there's a reversal, as you can see here. The red diamonds are short, sold trend confirmation signals. The blue diamonds are buy, bought, long-term trend confirmations. This is a pretty exciting concept, particularly as if you don't get a signal within a fixed period of time, it means that market's going to consolidate. And if you can get away from consolidating markets before they start consolidating, that gives an exponential boost to your profit profile. So talking about finding the tops, we were saying Gann wasn't confident in finding tops, and this is actually a copy of the members chart from 14th November 2023. And you can see this huge exciting gap up of the last bar on this chart, which is targeting the Danielcode blue lines. And then you can see in the very next chart, here's your members chart from the 16th of November. So you had that gap up bar, gave you almost perfect target recognition at the high, about 7 ticks variance was all. Then one more struggling up bar and the key reversal bar right at the high straddling the blue lines, and that's what gave you the top. So if you're trading Danielcode time bars, you'll find all the tops, all the bottoms. So risk is one of the things that you asked me to talk about this week, and risk, of course, is greatest when markets are closed. And that's for two reasons. First of all, if the markets are closed, you're not in the market, you're not making any money. That's a risk, because if you're trading Danielcode time signals, you're making money all the time. All the time. Occasionally you'll have losing days. Yes, we have losing days. They're no particular significance to us, because we know when we're trading Danielcode time signals, the average win is more than twice the average loss, which is quite extraordinary. But when markets are closed, risk is huge. At entry, risk is essentially the difference between your entry point and your protective stop. But think about some of the things that can happen when markets are closed, and I certainly don't mean to scare you, but one of the things seared in my mind was some years ago, and we were short crude oil, and we had a buy. It was a Friday. We had a buy signal for Monday, and it was an inside bar on the Friday, buy that high on Monday. Well, on the weekend, the Houthis managed to loose off some Iran-based missiles at Saudi Arabia's main refining plant, which of course made headlines on Saturday and Sunday, and considerable damage. And by Monday morning, of course, crude oil gapped up way past your entry, way past all the stops, massive, great big gap. And that's the sort of thing that can happen when markets are closed. To a much lesser extent, we used to see something similar in the orange juice trade. And that was because a frost, severe frost, back in the day could do huge damage to the Florida orange crop, or the California crop, be the case. And today it's much, much more sophisticated. They have tools to measure the frost and the drop line, as they call it. And for the big producers, they put up helicopters to stir up the air and stop it from forming into a frost over their orchard. But those are the sort of things that can happen when the markets are closed. And after that particular gap up that I was talking to you about in crude oil, a whole lot of people who were crude oil traders decided they were going to close their positions on Friday night and not hold their position over the weekend. Well, of course, nothing like that has happened since, and it's been a number of years since that happened. Will it happen again? Yes. But so what? You're not going to be worried about one losing trade, no matter how big, because you're going to have a trading system that overcomes all of those matters. So your stop loss, as the trade develops, risk becomes the difference between any current position and its protective stop. And that stop may be a straight stop loss, unusual for us, or a stop and reverse, which happens all the time. And that will happen when a new signal is elected. You might be long at one contract and you've got a new sell signal. You've got to sell two to get short one. The first sell cancels out the long position, the second sell gets you short. And you have to do that, of course, as well if you get an outside bar on the day of a new entry. And that happens. That's why people are so fearful of outside bars, but you don't need to be. If you're trading Danielcode time signals, even whatever your loss is in the portion of the trade against the trend will be small. In other words, we always identify trades that are with the trend or against the trend, and we use much tighter stops for a trade that's against the apparent trend, which is the precursor to almost all outside bars. And remember, we use normally 1 and 2 bar stops and tighter stops when a trade is against the apparent trend. And 1 bar can change that apparent trend. It's very common that you'll have a tighter stop for a trade that when you place the order is against the apparent trend, but at the end of that day you'll say, aha, probable change of trend, and you'll then change your stop loss regime to follow the time signals, or in the absence of a time signal, you'll be using a 1 bar or a 2 bar stop as the system tells you to. But the main point is there is never a trade without the accompanying protective stop or reversal point. Never, ever. And for those of you who think that you can get away by placing your stop when you feel you want to, let me tell you about an incident that happened early 2000s. It was a couple of years after the bull market in the NASDAQ, the dot-com bubble, and the market was wending its way down and causing some concern to regulators. And at that time, I had a group of young traders who worked at one of the broking houses I was using, who were all following my trades, which of course they shouldn't have been doing. That's a naughty thing to do, but it wasn't much concern in those days. We were a little bit more adult about our perceptions, if I can say that. But they were decent enough to tell me. They said, you know, we've been following your trading results. They're pretty phenomenal. We'd like to follow your trades. I said, well, fine with me. I love everyone to be making money. It's no skin off my nose as long as my orders are getting executed in the right order. And then I did mention to them about make sure you have your stop in the market. Oh, no, they said, well, the guy who's our main floor trader, he's part of this team that's copying your trade, so we can just pick up the phone and he'll place our stop straight away. And I said to them, be careful, that's usually not what happens. And of course, one particular morning about 10:30, it wasn't a day scheduled for any Fed announcements, but Greenspan came out and said, going to raise interest rates quite massively. And these guys who are right on top of the market had pretty much their own private floor trader, if you like. They had 26-point slippage by the time their order got filled, because don't remember in all electronic markets, orders are queued electronically. So trying to slap your stop loss order on at a later stage just means that you're at the end of the queue. So get your order placed as soon as you can. Get the stop loss that goes with it. There is never a trade without an accompanying stop loss order. So what I say about the Danielcode time trading program, and indeed our price trading program as well, is it is not only the most profitable system I've ever seen or heard of, it is also the safest. Now, what do I mean by that? So you'll often hear me talk about percentage return on margin, because margin is the inescapable cost of doing business. You've got to put up margin before you can open a trade. But have a look at this little piece of spreadsheet I've put up for you. The numbers right over on the right-hand side, they're the current margin for these markets. And if you look at the number to the left of the ones that are highlighted in yellow, that's the 29-day ATR, or average true range, of each of these markets. And we hardly ever have a stop that's greater than 1 ATR, and we never have a stop that's greater than 1.5 or 150% ATR. And look at how minimal our stops are compared to margin. For oil, our maximum stop from a working point of view is $1,700. Against the trade, against the trend, it's $870. The margin is over $7,000. For the S&P, our maximum risk is $4,200 on a trade with the trend. Half that amount, $1,200, in a trade against the apparent trend. The margin is over $13,000. Same with gold. $3,700 is about our maximum risk. The margin is $11,000. Natural gas, $1,600 is about our maximum risk. Margin is $6,000. Russell, margin is over $7,000. Our maximum risk is about $1,600. Beans, $960 against a margin of $2,600. UST bonds, $1,100 as our maximum stop against a margin of $4,000. So you can see that even with our maximum stops, which are the trades with the apparent trend, and in particular the trades against the apparent trend are the ones highlighted in yellow, the dollar value of those stops, they are a mere fraction of the margin. So you're never going to be caught with margin. Now, never's a big word in trading because everything in trading is about probabilities. And the words always and never should themselves never be said in anything to do with probabilities, because probabilities have many, many alternates. But make the point, we're trading with pretty small percentages of margin as our real stops, which are in the market always. We're never in a trade without the margin. And if you'd like to learn all of this, the Danielcode tutorial, what we now call Masterclass, that's one-on-one with me, and you'll do somewhere between 6 and many lessons. I've got Gabe, who I'll be talking to, I think, early next week. He started his tutorial in February, and he's still going. And he's a very busy guy. He's got some enormous personal commitments at home. He doesn't have a lot of time to spend on his trading, but he's working through it as and when he can. And I'm still talking to him whenever he wants me to. That's one of the big things about the live Danielcode tutorial masterclass, is that your questions, your deeper understanding of what we're talking about, that's done immediately as we go, and I don't think anything will replace that. So as I say, I don't want to pretend that the new video Teach Yourself Trading series will ever replace Masterclass. It won't. I doubt very much it'll ever get you to the level of Masterclass, but having said that, if it's second best to Masterclass, it's still better than anything else you'll ever see out there, or that I have ever seen or heard of. So if you are serious about becoming an elite trader, do please be thinking about doing your Danielcode Masterclass. And for the start of this new financial year, we put on a special deal for you. I'm going to give everyone who can do the tutorial in July a $1,000 discount. And for the first 3, I like to get these things moving straight away now. The first 3 who contact me by email, I'll give you an extra $500 reduction off your price as well. And we've offered this price only twice before over all the years, and it is a huge, huge reduction in price for you, which is only possible because the Australian dollar is relatively weak against the US. But act now. Email me, jneedham@thedanielcode.com. And creating and trading time signals, I've said here it's the big banger, which is very colloquial, and if you don't know what it means, it's the big deal, it's the big dog. The time trading signals are what guys are using when they're talking to you on our webinars of making 500% on margin, 800% on margin, 1,000% on margin from our world champion Mark L, who's with us today, and he's been so generous in coming on, letting me interview him and talking to you about his discoveries and his what he's achieved through doing his Danielcode trading tutorials. So email me, jneedham@thedanielcode.com. Ask me about any special discount. Talking about my discussion with Joris, so many people are focused on this question of win percent, and I can understand why, because in particular, if you're interested in using one of these funding firms, win percent is going to be a very, very big part of you achieving your requirements because it's nearly all day trading. And our win percent varies quite considerably. We've got different products. TO3 signals are about 76% win. TO3 plus trade signals are a bit better than that, 80-odd%. And the Danielcode time signals, you're in the market almost all the time, and that win rate is 52 to 62%. But the average win is better than twice the average loss. So the better question, rather than thinking about the win rate, is ask our clients, and that link there if you'd like to copy it while it's on the screen, that will take you to an interview that I did with Mark L. when he talked about his paper trading while he was doing the Danielcode trading tutorial and the ups and downs he had in his own mental approach to trading as he went through that. It's very, very incisive. It's very, very revealing, and I'm most grateful to not only Mark, but everyone else who's done that. We've had Scott and Amy to tell us about their trading results. We've had Justin from the Hunter Valley not only tell us about his paper trading results, but show us and share with us a massive piece of research he's done. That's been quite extraordinary. He's gone through hundreds and hundreds of markets using Danielcode time signals and says that he has never found a losing year. Let that sink in a bit. He has never found a year that had a loss in it. And I don't think many of you appreciate just how fabulous these Danielcode results are, but you will be as we go along. And here we have it. You can go to a website called Morningstar, and they're a huge, huge business, and they monitor the trading results of almost all of anyone who's commercial. So you look at their very best results, US large caps for the last year, the very best of them, total return was 31.7% in the year. If you then look at the 3-year return, the total for the 3 years, not each, the total together, 10%. That's the best. If you were a Danielcode tutorial client and you were returning those results, I tell you, you weren't doing it right. In fact, you're not only not doing it right, you're pretty near useless. Their large cap international funds, total 27% in the last year. Total return for the last 3 years, less than 5%. Pathetic. Core bond futures, that's a bit misleading because they're actually talking about the return on the bond, 6.7%, total 2-year, negative 5%. These are the people who Morningstar are monitoring and say these are the best of them. And this is the joke you're never told. The returns from these wealth managers and health funds, the majority of them are absolutely useless. And it is a joke, isn't it? NVIDIA at 42 times earnings. Have a look back at that in a couple of years and we'll see how much fun the traders were having at that stage. Small caps, as I've said, look like they might have all been reweighted today. That's the only possible explanation. A spontaneous market erupted reweighting across the whole range. More fun. We'll see what happens. So let's move on. So in the Danielcode trading tutorial, that's the one-on-one masterclass, you're in the market almost all the time. You trade both ways, long and short. Risk is based on 29-day average true range, which I've shown you, and they return multiple 100% profits per annum. Return on investment, 500% plus on margin annually. We have a number of clients who've told us they've achieved those results or better. And the risk is always controlled, and it's a fraction of margin, I say, which is the basic cost of doing business. I've shown you that already. And with your Danielcode trading tutorial, you will be able to cover any market in futures or Forex. I talk mainly about futures at these webinars, but I started off as a Forex trader, and we have a large number of Forex traders, and Forex works exactly the same as futures. There is simply, in reality, no difference between it. I know the Forex promoters go to endless trouble to try and pretend they're in a different business. They're not. It's the same business. And your tutorial will take anything from 6 to many lessons, all are different. Some people have time available they can spend on it. They'll get through it in 5 or 6 lessons. That's it. They're ready to row. Other guys will take much, much longer, but you have, with the Danielcode Masterclass tutorial, you have unlimited support. I'm here for you, God willing, as long as you need me. Now, let's shift our thoughts to trend, which is always a function of time. You can't talk about trend without stating the time chart you're using. And Gann said there will always be more than one trend working at any time. And what he's talking about is different time cycles inside that trend. I use several different methods to determine probable or apparent trend. And a true confirmed trend change generally takes 3 days, 3 bars or more. As futures and forex traders, we have to determine trend pretty much on the last bar that we could see. In other words, we're determining trend on a 1-day basis, which is, of course, not as accurate as a 3-day, and it's got some errors in it, but this new 3-day trend change tool confirming a trending market, that's powerful, and it's very different. And remember, Danielcode time trading charts actually create their own trend signals, which is another way of thinking about markets. So gold, this is gold. This is 2 years and 7 months of gold, almost 3 years. It's quite recent. We haven't just updated the last bit on it, but they're all the same. And you can see this is a market that does trend. It rallies up, it goes down, it rallies up, it corrects, it goes up some more. And if you look at that, all of those turns look to you to be higgledy-piggledy and in different positions, but they're not. Have a look at this. If we run a 29-day buy cycle through that, all of a sudden you can see that every one of those blue diamonds pointing up, which are the Danielcode buy signals, you can see that every one of those has happened at a high in what we call the DC down time cycle, and it's a 29-day cycle. So where that indicator reaches its high, that is 100%, that gives you a probable change of trend as a buy signal. Spend a few moments, look across that, just look with your eyes up and down. You can see that every significant turn has come at the expiration of a 29-day time cycle. Keep looking. Here's the other side of it. This is a 29-day sell cycle. Do the same thing. Look at those red diamonds with a DC time sell signal on them. They all happen when that blue indicator is at its maximum, is at 100%. Extraordinary stuff, isn't it? You never knew about this. Well, have a look at this. This is almost 3 years of gold. And every buy signal and every sell signal of any importance, I'm not saying it's every signal, you can catch every signal with a shorter time frame substrated underneath, but simply looking straight at the basic 29-day time signals. Why 29 days? Because that's Danielcode time. That's the first number you find in the search for Daniel's code. And that's one of the most basic time cycles in our world. Our world revolves on a 29-day time cycle. It's what's called a synodic month. It's the average length of a calendar month. And there you are. Every single turn for the last, it's almost 3 years, this chart, has come exactly at the expiration of a 29-day cycle. So, not every turn. There are other turns that have not been picked up, but every important turn, every single one, has come at the expiration of a 29-day cycle. And that's the basis for teaching you trading time. And one of the vital things about trading time is the ability to call the apparent trend. And that leads me to a nice little anecdote. These guys happen to be members of the Australian cricket team who were out having a nice day out doing a bit of fishing on a river somewhere. But what I'm trying to show you is 4 men in a tinny. And a tinny is the Australian expression for an aluminium boat. You can see they're sitting in a tinny there. They're usually 14 to 16 feet long. They're quite open. They're made out of aluminium, which is why they're called a tinny, and they have an outboard motor. The anecdote refers to the business of calling apparent trend. And the story goes that 4 guys, not these 4, but another 4 guys who were tradesmen, they were working on some of the new buildings going on at Hayman Island up in the Great Barrier Reef. one of the world's 7 wonders. And they got to the afternoon. They knocked off early. They had a 2 o'clock knock-off time. So they jumped in a tinny and they went out into the Whitsunday Passage do some fishing. And they were sitting happily in their tinny, going about their fishing and beer drinking, which often goes together, those two sports. And a great big powerboat came roaring down the channel, sending out a massive wake, as big powerboats do when they're travelling at speed. And it swamped the tinny, and our 4 guys finished up in the water. Well, that wasn't too much of a problem because they were in the Whitsundays and they were not far away from Dunk Island, which is one of the other little islands in that group. So they quite happily started swimming quite leisurely towards the shore. Eventually, one of them looked around and said, "There's a shark behind us." Well, that changed the whole deal. Immediately, these guys all went into overdrive. They were powering along, got to beat the others and get to the shore first, or the shark's going to eat us. Well, of course, that's not true. What actually was going to happen is that the shark, if it ate anyone, was going to make pretty much a random selection of the 4 with a strong bias towards the hindmost. In other words, don't be last. So the real question was, you don't have to be the best of them all. You simply have to be better than most of them. Because as long as there's someone behind you, that's the prime bait for the sharks. And it's the same with calling trend. If you're apprehensive about what the trend is for each particular trade, don't be, because you're going to take that trade no matter what. You're simply going to have a different stop-loss protocol. Okay? That's what time trading, I should say, with Danielcode is all about. This is beans again. This is this 3-in-1 trend signal confirmation I'm so excited about. It comes late. It's always late. You still need the Danielcode time signals to get in at the highs and lows. And as I say, you will be in this market days, sometimes many, many days beforehand. But these are trend confirmation signals that are completely new and different. And what I'm finding with them is if there is no trend confirmation signal, you will get consolidation. And that's been a huge issue for everyone over the years. If we can avoid consolidations proactively, we're going to enhance our trading even more than it already is, and this signal will allow you to do it. Now, that's not going to stop you finding the highs and the lows. These are the highs and the lows that you'd find with your Danielcode time trading signals on the daily chart anyway. You can see they're very, very specific, very, very accurate. That's not going to change. But look what happens in these retracements. All of these retracements or moves against the apparent trend, look how precise they are. They're either at one of the Danielcode red lines, which are our measured retracements, or the black line in some cases. But every one of these retracements is going specifically to one of the Danielcode retracement numbers. Not maybe, not near about, absolutely within 0.1%. Not 1%, 1/10 of 1%. It's amazing stuff, and it happens all the time. This is going to allow you a new medium of trading. For those of you who want a swing trade, once you get this 3-in-1 trend confirmation signal, you can back your stops off a bit, give it a little bit more air, and you can stay in for the whole swing trade if you like. This shows you the sort of money that's available on that method. And it also works a dream on the algorithms. Those of you who've been interested in algorithmic trading, this 3-in-1 new trend signal, that will really boost your algo trading immeasurably. So this was our trading today, folks. This was the S&P. It had a TO3 sell signal from yesterday. It had a blue line signal leading up to it, which it ignored, and it went through and it found the next blue line. That's what it does. Have a look at Wednesday's high, just a handful of ticks away from the 560, 5690, 50 number. Exact, precise target recognition. Put your sell signal on. Got this big turn right in today. Not much follow through on that, was there? But there might be. Here's gold. We had a TO3 plus buy signal 2 days ago. which we're still holding, and you can see it's going up, and it's now threatening the next resistance at 24.32. Again, a weaker close, well off its highs, but almost exactly on the 24.20 blue line. And that's what markets do with Danielcode time and price trading. This is copper. There's a huge weakness in the nickel markets. At the moment, so much so that BHP, one of the biggest nickel miners in the world, has just announced its closure of one of its major nickel mines. And that brings back memories of the great long squeeze in the LME in nickel, which destroyed that market entirely. Those of you who remember that I talked about at the time was quite extraordinary. Well, here we are, that chap who had that long uncovered naked long on, which he had a naked short on. He'd bought 453 new nickel mines down in Indonesia, which is the benchmark for cheap production, which is why the Australian market can't compete with it. But nickel was normally trading around that $28 a market, and once the smart guys, almost certainly the big boys, including the Squid, found out that he was short, they pushed that price up over $100. What happened subsequently, because I think he was a prominent Chinese businessman, and a Chinese company had recently bought and owned the London, the LME, London Nickel Market Exchange there. They cancelled 2 days of those trades. Absolute scandal, still tied up in lawsuits, ridiculous. That's what can happen in markets. And this was natural gas. Today we've had a nice big run down, $4,400 odd in natural gas on the short side. Little tortured rally, I call it tortured, and a flip me sell to get back into the short trade today, and it was rather unconvincing at the close. But we will see. Here's the NASDAQ. Absolute perfect TO3 and blue line sell signal. Number, the high of that right at the blue line. Couldn't be better. Over it goes, and it did go down a bit today. It's almost a $5,000 trade today, just for knowing the TO3 plus signals. This is the Russell on breakout. This is very important because we've had a standard side signal, a non-trending signal for this market on our 3-in-1 market for a couple of weeks. As you can see, this market's been going sideways for quite a while. But look at what happened yesterday. Look how subtle that breakout signal is. It's a normal, very simple, uncomplicated support and resistance line. You can see Wednesday it closed just above that resistance line to give you the first sign of a breakout. And today it went nuts. But look what happened. Look where it ended. You couldn't see the top of that chart. You haven't got that much data on the members charts. I only show you the next 3 or 4 levels. Look where it ended. Almost exactly at the blue line, 2148.9. That number's been on there for weeks and perhaps months. That's exactly where it went. More volatility with Danielcode leads to more accuracy, which is the complete opposite of what happens in almost all other markets. This is beans again, which is a wonderful market. This is this little leg down. We've been looking at the big chart. This is the daily chart. You had a perfect TO3 sell signal. At the high, down it went. A nice $2,200 from that little short trade. Here we are, UST bonds. We had a sell 3 days ago. That set up the flip me. Remember, with Danielcode, signals are so powerful that a failure, it means you're wrong, and if you're wrong, you need to do something about it. In this case, if you're short and you're wrong, you need to get long. And that's what flip me is about. If the failure point or the initial stop loss for any Danielcode trade signal is breached within 3 days, that becomes a flip me, and it's a signal to get long, as we did today. So here is another copy of the link to Mark L's interview with me about his trading, his paper trading while he was doing his tutorial, and his other comments about his life doing a Danielcode tutorial. I do recommend you watch it and listen to it. It goes for about 20 minutes or so, and it's hugely full of valuable information. Most kind of Mark and the other folk who've also assisted us by offering that sort of insight. If you haven't already, folks, please help yourself to a free trial. Go to the website, click on the register button. If you have any issues, contact Terry at support@thedanielcode.com. If you previously had a free trial, the market will remember you. The computer, I should say, will remember you. And you will need to talk to Terry to recover your password if you've lost it. Otherwise, after a reasonable time, we're more than happy for you to have a free trial again. Finally, folks, this is our disclaimer. Do be aware, please, that trading derivatives, in fact, trading anything, has inherent risks. It is very easy to lose your money if you don't know what you're doing. And the good news is that by the same token, it's very easy to make a whole lot of money if you do know what you're doing. So make sure you become one of the ones who know what they're doing. Well, thank you for being with me, folks. Enjoy your weekend. It's Friday morning for me here, so I'm almost finished for the week, and that means I can plow into dictating the rest of the video tutorial session in the next couple of days. Anything you'd like me particularly to talk about, please send me an email and I can prepare something for you at the next webinar. And apart from that, I hope you've had just as good a week trading as we have, and there's no reason you shouldn't have. It's all there for you, TO3, TO3 plus, 6S, whatever you like. And it's absolutely wonderful trading yet again. I'll now say bye-bye to you. Enjoy your weekend, folks, and I look forward to talking to you soon. Bye for now.